There we go.
All right, perfect. So yeah, just a little bit on my background and why I love VA loans, and that's a good topic for me. So I grew up in the Bay Area, on the peninsula, and then in the late 80s, my family saw the housing boom that was happening, sold our house on the peninsula and moved us to Modesto after my first year of high school. So my early upbringing was in the Bay Area, Burlingame, Hillsborough, San Mateo area. And then I went and finished high school in Modesto. So strong connections in Bay Area and Central Valley. And then right after high school, I joined the Navy. And I was in the Navy for 10 years. I was part of the nuclear submarine engineering program and did that. I was on a submarine for almost 5 years. And then I was an instructor at a nuclear power school that does a certification for the engineers for my my last few years in. Went to school and got out of the Navy at when I lived in upstate New York. And then I moved back to California and right when the housing crash was going on. I moved from upstate New York to California and got settled in San Jose, lived there for a few years, worked in tech. And then in 2015, I moved to Mountain House and it was a great time to move there. I decided I didn't want to commute anymore and be in tech. And I got back into the mortgage industry, which I was in New York for a little bit before I moved back to California. So that's just a little bit of background, and being a veteran myself, I love the VA loan program. It's a great opportunity for our veterans. So I wanted to go through a couple of things so everybody could be familiar with it and understand what it means when you have a VA buyer. Like Ron said, I put together this VA myths, which I think I've sent out to a couple of you, but it's really helpful to talk to listing agents and sellers about some common misconceptions about VA loans. So the first thing I wanted to cover is, what is a VA loan? What does it mean if it's a VA loan? There's a lot of misconceptions about what that is. So the VA is the Veterans Administration, and they don't give loans. They don't loan money. They don't have their own money to lend. It's a government organization that guarantees loans. So much like FHA, everybody might be familiar with FHA loans. This is another government entity, the VA, that guarantees loans. And because they're guaranteeing loans and providing a benefit to our veterans to be able to purchase homes, they dictate the rules of what loans they're going to guarantee and what loans they're not going to guarantee. So that's what the guidelines for VA loans are really about, is they provide these guidelines to lenders like me that really tell us what the structure of the loan, what the qualification requirements are, and what it takes to be guaranteed as a VA loan. And what guaranteed means is that if there's a default on a VA loan, the VA makes up that amount of loss to the lender, basically. So that's what a VA loan guarantee is. This is a government pool of money, government organization, and they're going to guarantee that this is a good loan. That's the basics of it. And so some of those guidelines that really come into what the core of a VA benefit is that it's much easier for a veteran to qualify for a VA loan than it is for a conventional loan, and in some cases, even an FHA loan. The credit requirements are much less stringent. So veterans with lower credit scores or maybe a credit history that isn't great, maybe they've had a bankruptcy or even a foreclosure in the recent history, veterans can qualify for VA loans even if they have some of these bumps in the road over their past recent history. And the reason that is a great benefit is because it's really trying to encourage home ownership for veterans, right? With these more loose requirements, I guess is the way to say it. It's a good way for veterans to be able to have the hope of home ownership. A lot of military transitioning out of the military, they don't have a solid work history. They are making these steps to get back into the workforce. So the other thing that's a lot more lenient on VA loans is the work history. You can apply for, you can get approved for a VA loan, even if you're still in the military, just transitioning out with an offer letter or something like that. So the requirements are what it comes down to is the biggest benefit for a VA loan. And the one that everybody always knows about is this no money down scenario. Veterans can qualify for a home purchase with no money down. And that's really what the biggest advantage of it is. Yes, the credit requirements are a little easier. Work history requirements are a little bit less stringent, but the biggest benefit is this no down payment option that veterans have. And I wanted to talk a little bit about that one because that's one of the biggest myths that I have just dealing with buyers. And I don't know how often it comes up when you're presenting offers to sellers, but as buyers agents, when you're talking to the buyers about VA loans, sometimes they don't even know the benefits. The veterans themselves, I do a lot of education with veterans, and they're not even aware of all these benefits of the VA loan. And they usually know that the no down payment option is available, but something that changed recently in 2022 is that you don't have to have, there used to be county limits in place is the best way to say it. So for example, when I bought my house in Mountain House, it was 2016 when we actually purchased the house. There was a loan limit in place, and most of you know about the county loan limits that are set either for FHA or for conventional loans. VA loans used to have a loan limit, and there's a lot of people that still think that there's these limits in place by county, but in 2020, there was a law passed that did away with all of the county limits for VA loans. So that's really changed the game in 2020. Now, instead of veterans having to come in with the difference of whatever the loan was over those limits, there's no more limit. The sky's the limit, basically. If a veteran has enough income to meet the guidelines, and I'll get back into that in a second, but if the veteran has enough income and can qualify for the VA loan and the payment that's going to happen for each month with the taxes and insurance, they could qualify for $1 million, $2 million house, depending on what kind of job they have and what kind of income. There's no limit anymore. So back to my example, when I bought a house in 2016, there was this county limit. The old rule used to be that you had to make up part of the difference between whatever the loan limit was and what the sales price was, and you had to come in with some down payment. So for me, I had to come in with, small down payment. It wasn't anything drastic where the house prices were in Mountain House at that time. But now it would be a huge number. So this was a huge change to VA rules, and a lot of people just don't know about this. So that's one thing to educate either the sellers that you're presenting offers to or your buyers when you're working with them. Like, look, if you're a veteran and you can qualify for this VA benefit, then this no money down is really your biggest benefit that the VA loan program provides. So let's talk a little bit about the structure of how the payments work and what that means when you're qualified for a VA loan. So when you're working with a buyer, one of the first steps for them, obviously, is the pre-approval, working with a lender that knows the programs. But one of the things that I can do as a direct VA lender is I can tap into the VA system and pull eligibility certificates for veterans. So a lot of these veterans, they'll hear about what VA loans are. They'll try to do some research on the web. And just like you guys know, with any search related to real estate or mortgage, the first half of their search is going to be ads, right? It's going to be things trying to pull people in, get their information, and steer them towards certain lenders or realtors. So there's a lot of misinformation and miscommunication that comes when people are doing research on VA loans. So when they get connected with somebody who knows what they're talking about, an agent or a lender, then what I can do as a direct lender is go to the VA system, put in the person's information, and it will give me directly their certificate of eligibility. So
is that the DD-214?
No, it's even better. So most veterans, so take my example. I got out of the Navy in 2001. When you get out, you get this big stack of paper. It's probably mostly electronic now, but the information about your time in the military is called a DD-214, and that's what Ron's mentioning. And most people know this code name is something that that most veterans need or have. It lists out that you were honorably discharged. It lists out what your rank was, what your pay was when you got out, the benefits that you're entitled to. So if for some reason I'm not able to pull directly from the VA system, the veteran's certificate of eligibility, that's the key, is we need a certificate of eligibility to qualify for the VA loan called a COE. So it's not the close of escrow, it's certificate of eligibility. But that shows us all the information that we need. Now, for some reason, it doesn't come up, then I'm going to ask for the DD-214 from the veteran, because there may be some additional verifications that have to happen, something like that. So, I have mine laminated and in a file folder and scanned in my computer and saved and all that stuff. But for a lot of people, that one little form is difficult for them to produce. Maybe they've moved 3 times and don't know where it is. So most times we don't need it. I would say 90% of the time we don't need the DD-214, so it doesn't even come up. It's only these cases where somebody maybe is an older veteran that they're not in the system, or they went into the reserves and came out, or some of these one-off situations that we have to verify the eligibility with another form, that DD-214. But most of the time, all I need is their mortgage application, and then I can go right into the VA system and pull that. And the things that I'm looking for on that, which is another important thing that you can communicate to your veteran clients, is that on the certificate of eligibility, once I pull it, it's going to tell me if they have any disability rating. Now, when we think of disabled veterans, we think of the Wounded Warriors and all the things we see on TV and the charities that support them. When I'm talking about a disabled veteran, I'm just talking about somebody that has a 10% or more disability, and they'll know that because they get a check every month from the VA. So that's one of the questions that I ask. Are you receiving any income from the Veterans Administration? Does the government send you a check every month? And the reason why that's so important and why those veterans that have some kind of disability rating, it may be for hearing loss, it may be for PTSD, whatever it is, if they've got 10% or more, then they don't have to pay the VA funding fee. And that's an important thing that the lender will explain. I'll go through all the details of what the VA funding fee is. The best way to think about it, if you're familiar with FHA loans, is that there's an upfront FHA mortgage insurance fee that's basically paid. It gets rolled into the loan. It doesn't come out of their pocket for the closing costs, but it's the same thing for the VA. There's a funding fee, and that's how the VA guarantees these loans. They have a fund that they collect all these funding fees. And then if loans default or whatever, then they have money to make it up. But the funding fee is something that's important for the veteran to understand. And the lender will explain that, that it goes into their loan, but there's nothing out of pocket. So if they have a 10% or more disability, that whole fee is waived. And the fee can be about 2%, depending on if they've used the benefit or more. It could be, I just usually start with 2% and then, see what their specifics are. But if we're giving them an $800,000 loan, then it could be a $16,000 additional fee that gets added into their loan. Now, again, I didn't mention it before, but with VA loans, there's no monthly PMI. That's the other big benefit. So you can buy a home with no money down. There's no monthly PMI, and you're going to get the best interest rates because VA interest rates are typically lower than conventional and jumbo rates. They usually align more with FHA rates, which are on the lower side. So, all these things put together make the VA benefit huge for the buyer. But like is in the document that Ron's going to send out, there's some other myths that are still out there that people think, oh, VA loans are more difficult. It's harder to work with veterans. The appraisers are harder. All these things that we can help educate sellers specifically. We want to educate the buyers on what their benefits are. And those are, pretty easy to understand. No money down, no PMI, easier qualification requirements. But when it comes to presenting these offers and the myths that the listing agents or the sellers may have, number one was the limits based on county. So now we busted that myth. There's no more limits on any counties. People can come in with whatever the purchase price is with no money down, as long as they can qualify in the other areas. The second thing that comes up a lot is that VA loans take too long to process and close. And that's just not true either. We can close VA loans just as fast, or some cases even faster than any other type of loan. And if the lender is doing their job up front with the pre-approval, with getting the buyer ready before they issue that pre-approval letter and understanding what the payments are, what the terms are, then there's no difference in the processing time with a VA loan. One of the things that is different is that there's a little bit more manual underwriting done than just on a conventional loan. We can go with the automated underwriting that just gets verified by an underwriter, basically. But with a VA loan, there's a little more manual underwriting because I don't know how familiar everybody is with all the terms in lending, but there's a loan to value, which is basically that down payment minus the purchase price. So we can go to 100% loan to value for a VA loan. But the other ratio that's super important to us is the debt to income ratio, right? How much money they're making versus how much total debt they have with their new mortgage payment. So for a VA loan, there's no debt to income limit, just like there's no credit score limit either, technically, on a VA loan. And remember, I said VA makes the guidelines. They don't lend the money. So they give us the guidelines for all the lenders, but it's up to the lenders and the banks to determine, if they have other specific guidelines to mitigate their risk. So some lenders may have credit score limits or debt to income limits, but technically per the VA, there's no limits on those things. It's up to the lender if they want to put those overlays on it, is what it's called. So back to the debt to income, since that's not a real issue with VA loans, we do something that's called a residual income calculation. So it's similar to the debt to income. The underwriter is going to manually look at what their income is, how much they're paying in taxes, what their household size is. There's a whole different list of factors that go into the qualifying income. And I've seen people qualify for VA loans. I've closed VA loans where people have a 65% debt to income ratio and are meeting the residual income based on all these other factors. Now, that number 65 might not sound high to you, but the typical limit for debt to income is 45 to 50. So these are people that either are having lower income or higher payments, but they can still qualify. And that's one of the things that's important that we're communicating to the veterans. The listing agents don't need to know what the DTI numbers are. That's not the business of the listing agent and the seller that's reviewing the offers. But for you as buyer's agents to know that somebody who may not think they can qualify because of their income, there's a whole different way that the VA loans calculate this residual income and the qualifying income. So that takes me back. I was starting to talk about the longer processing time that people think it takes for VA loans. That's just not the case. At my company, our turn times for underwriting are 24 to 48 hours. So as long as the loan officer is doing their job up front, getting all the paperwork in, we get the offer in, and we can start getting into the underwriting process in order to the appraisal, then it's just the same as any other loan as far as timeline goes. Number 3 myth on my list is it's too difficult to qualify for a VA loan. And that one I've already gone over. Less stringent credit requirements, less stringent income requirements even, and there's that no down payment option. Number 4 is the big one on my list, and that's VA loan appraisals and inspections are tougher than conventional and FHA loans. Now, depending on what part of the country you're in, I'm working in multiple states, and there's rural properties here. There are too. You go up to the French Camp area and you start to get up into the hills a little bit. There's some different types of properties than just in Tracy, Mountain House, Livermore, some of the more developed areas. So the VA does have specific requirements when it comes to well and septic that are different from conventional loan requirements. So you may run into some of these extra testing requirements for water purification tests and flow tests on a well and septic system certifications. That may be some additional stuff that has to be done for a VA loan, just like it would on an FHA loan in most cases. So there is some truth to this myth that I have that it's more difficult for appraisers and inspections, but that only applies to more rural properties and more unconventional properties that come in. But the one thing I will say is that the VA is a lot more lenient on additional structures on properties. FHA has a problem with ADUs. Sometimes they're starting to change the guidelines. Conventional guidelines have already changed on those, but the VA is very liberal on accessory dwelling units, outbuildings, all these kinds of things. I've closed some homes over in the Lammersville area for veterans, and some of them have these, a double wide or single wide in the back that may or may not be habitable, and all these crazy things that we can't get the jumbo lenders to sign off on. But with VA loans, I haven't had any problems. They're much easier for those property type questions. So there's a little bit of truth to the myth that there's more stringent appraisal and inspections, but it really depends on the property type. And when it comes down to appraisals, that used to be everybody's hang up. Nobody wanted to accept a VA offer because they thought the appraiser was going to take too long and have all these extra requirements. The thing to understand is that for VA loan appraisals, it does take a specific VA certified appraiser. So sometimes the turn times can be a little bit longer depending on the volume. Like when we were going through the refi boom last year and the crazy market, it was really difficult to get appraisers out, and VA appraisers, since they're a more select group of appraisers, they were more difficult to schedule. So it wasn't that VA loan or VA appraisals take longer. It's just sometimes it's harder to get the appraisers assigned because there's a smaller pool of them. So we could run into that, but usually their turn times are reasonable, especially as things have settled down on the refi front. We're not having as many refi appraisals, so there's more appraisers in the market for every type of loan. You have to keep in mind that a pest inspection is required in California. So for every VA loan, there is a termite inspection required, a home inspection, and the termite has to be part of that. But the thing that it makes VA loans a little bit different on the inspection side is that when you get that inspection report, all Section 1 items have to be cleared before we can close the loan. They can be pushed out to not affect the approval and the timeline, but we have to have proof of correction of those Section 1 items. And usually those are dry rot, or if there's, some kind of broken gutter or water issue on the outside. Those are the biggest ones that we see in our area. Is there's a gazebo built onto the back of the house and it's been getting hit with the sprinkler for years, and there's dry rot on the wood paneling or something like that. So that's what the inspectors know to look for, especially for these home inspections. But they're usually not things that are so difficult to clear. It might be there's somebody put in some steps up to their back door and it doesn't have a safety railing on it, or it's mostly health and safety and water damage type of issues that I see. So that's what Section 1 items are on the inspection report. Now there's also could be Section 2 items, which are usually of less severity, and it's up to the VA underwriter, and those are underwriters that are at the lenders. It's not somebody from the VA, but the underwriter is going to look at those Section 2 items and make a determination if it's really a serious health and safety. 95% of the time they're not. The inspectors know how to classify those things as Section 1 or 2, but they will get looked at, and from time to time there'll be something in Section 2 that does get called out. Something I saw was a broken filter pump on a pool. It wasn't a health and safety item, but it was definitely going to affect the upkeep of the property, so they required that be fixed, and so it got fixed before closing and we were fine. So that leads me to one other common myth that was out there, and it's the last one on my list here. Is VA loans require the seller to pay for inspections and other fees. That's something that's baggage left over from years ago. It changed, I don't know how many years ago, more than 5 years ago, definitely, that in California, veterans are allowed to pay for anything. And that was because the VA opinion on that, especially in our market, is that you can't have an offer that's going in that's going to be a disadvantage for the veteran because they're not allowed to pay for things. And it used to be inspections. It used to be correction of Section 1 items. The VA was really trying to protect the veteran from having to repair a home that they were going to buy. But what the pushback was, and I think it was the National Association of Realtors, CAR, all those lobbying organizations that you guys are a part of and help support, and why it's important is because the VA was able to change those guidelines so that offer could be just as competitive. I mean, if you're a seller and you know that something's going to have to get fixed and you don't want to fix it, why would I fix this if somebody's buying my house? It's a competitive market. I have 5 offers. Well, if the VA offer says that the veteran isn't allowed to pay for these things, then that offer is obviously going to get put to the side, right? Because the seller's not going to want to pay for those things. And that was a big change. So that's one of the myths that's still out there. That's important that you educate the listing agents and the sellers when you're presenting these offers, is that if there's anything that they know that is going to come up on the inspection or whatever it is, the veteran is just in the same position that any other buyer would be with how that gets handled. Either gets negotiated or whatever, but the difference is that it usually has to be fixed before closing, right? Somebody's got to pay for it, but the veteran can pay for it. And that's something that a lot of agents still don't know about. That was an issue 5-10 years ago, probably, but there's a lot of legacy knowledge that's out there that people don't know these changes have been made. So that's really the nuts and bolts of what I wanted to cover. Ron, if you have any specific questions or other topics for me to throw out there, I'd be happy to cover them.
Yeah, I would say the biggest thing is educating the listing agent. That's probably the hardest part today, that they just don't know because they are so trained to saying, what was the fees at one point? $1,152.
Yep. Yeah. So you remember, I mean, that was more than 5 years ago that there was this limit on the fees that the veteran could pay. And that's all gone now. Some states that it's up to the state requirements and what they put on the lenders. So there are some state to state requirements, but in California that all went away because of the competitive market here, and veterans were losing out because sellers didn't want to pay this extra $1,000 in fees or whatever. So yeah.
So educating the listing agents, probably the hardest part, getting a VA offer accepted, and the seller themselves, because they have those fears. I would say that's probably the biggest challenge you're going to have. Also, I think a big disservice for the VA, for the veterans, is they used to write these love letters that's gone away now. And, people would, I've seen it personally where they got properties because they serve our country, right? And now that we no longer can provide those, having an offer that says VA and having a love letter, two different worlds. So we're missing out on those things. So it is a little bit of an uphill battle for them, but I think that it's a great loan. It's a great loan for these guys. And if they have it, they should use it, but it is tough. I will tell you it's tough.
Yeah, on the new car form, does it still have the check boxes for type of loan? Yep. FHA, VA, and conventional. I figured that didn't go away. I couldn't remember on the new ones if that was still there. And the other one other thing to talk to your buyers about is that I didn't mention this in the guidelines before, but you can only have one VA loan at a time, and it can only be on your primary residence. Now, if there's two veterans that are married, then they can each have a loan on their primary residence. I've worked with buyers that came from North Carolina. They bought a property there, used their VA loan benefit, turned it into a rental property, kept the VA loan on that. And then they moved here to California and used the spouse's VA benefit for their new primary residence. Now, if they refinance or whatever, they can't refinance into another VA loan, but your loan sticks with the property. You don't have to restructure your loan if you move out and turn it into a rental property.
Is the VA loan still assumable?
That it is assumable. It's very rare that happens these days. There's a fee involved with turning it over to another veteran. That just means that as part of the VA note on the property, if you happen to be selling to another veteran who's qualified for the VA loan, they can take over that VA loan and shift the benefit to the new buyer. Not that common, but yes, definitely around. That's still part of the program.
Perfect. Well, thanks a lot, Seth.
My pleasure.
Information. Do appreciate it. One of the things that you can do when you write a VA loan is have Seth call the listing agent, because he can bring their anxiety down because of his knowledge and his experience. And that's a huge ally, especially when you deal with VA. That's going to make a big difference. All right, Seth, thank you very much.
Okay, thanks everybody. Nice to see you. Have a great day. Bye-bye.